Good evening, everybody. We're going to get started. If anyone wants to get any food or coffee or beverages, help yourselves. Thanks for coming out tonight. Certainly a very interesting time and good timing for this presentation. We hope that we can address any questions or concerns. So as we proceed, feel free to stop me or our guest speaker, John Carl. We'll answer questions. We'll be around afterwards. And as always, you can call any of the advisors on our team, Mark, Cale, Ken, Nick, or myself, if you think of something on the way home. I'm going to start out kind of with my summary. That way, if you want to leave, you can and have an idea where we're going. I think, big picture-wise, the next few years, a lot of people are going to feel worse off. I think a lot of people may be worse off. But I think the markets, for the most part, are going to do very, very well. And we may see some tremendous growth in the broader equity markets with a lot of short-term volatility because of concerns, uncertainty, that type of thing. And markets don't like uncertainty. The drop that we've seen, particularly last week, but over the last few months, really appears to be due more to perceptions than any fundamental problems. If you go back to 2008, we had the subprime situation. We had some fundamental economic problems that we just don't see right now. And I'm not going to read all the numbers to you. If you have a white paper that goes through the numbers, retail sales are up, auto sales are up, government continues to spend, which is a good thing. Ferrari just had its best 6-month period in history, selling more cars than ever. U.S. companies are more profitable than ever. U.S. companies have more cash than ever before in history. The problem is they're not spending it because they're looking for some clarity on what's going to happen with taxes and regulations. And we just had this great debate about the debt ceiling, and really, at the end of the day, nothing was decided. So we don't know what's happening. And that kind of concern is what fuels these big market swings. Understanding that the market's going to swing typically too much in both directions. It's going to overcorrect on the downside because panic feeds panic. It'll overcorrect on the upside because greed feeds greed, and then it reaches some sort of equilibrium. The interesting thing is, for all of you that are clients, what the market does is really unimportant. Who cares? I mean, at the end of the day, you're investing to maintain a lifestyle, to be able to afford to do things. What the market does day to day, week to week, I mean, it impacts you, but not directly. So changes to your plan should only be made based upon changes to your situation. Now, there's no question when you're paraded by the media about how this is the next apocalypse coming, just like all the others, but it's different this time. Understandably, people do get concerned, and that's one of the reasons that we want to do these types of presentations and bring in outside experts that have a track into Washington and have some insight, such as our speaker tonight, John Carl. The other thing is on our website, those of you that access it, if you go to the Follow Us section, we update that at least monthly, but when events are happening, maybe as often as daily. The handout is actually the white paper from August 5th. And then there's another section that says resources, consumer alerts. And anytime there's a piece of legislation in Washington, we'll update you kind of what it means and what it is. But as I say, our philosophy, really is long-term diversified, make changes as needed. The interesting thing is when perceptions are at odds with fundamentals, it creates an opportunity. Because as I say, I think there are risks. The biggest risk that we're going to face is inflation, that things are going to cost more down the road. I think a big risk is taxes. But I think for well-diversified investors, the markets are not a risk. Certainly we always advocate having at least 6 months to a year's cash for short-term needs so you can weather these types of things. But with inflation, it's important that your money grows. Whether you're retired, you're going to retire, people are living longer, people are living forever. And, you know, over time, things go up. And we've certainly seen that. If any of you have been shopping for groceries or anything else, contrary to what the government might tell you, saying there's no inflation, stuff costs more. Let me ask you a question. How many of you paid more for the last car you bought than the first house you bought? That's inflation. And if you go out 15, 20 years, and you say the average vehicle will cost $150,000, $200,000. I mean, it sounds ridiculous. But think about what you paid for your last car versus that first house. And so, I think the reality is some of this stuff we hear in the media just gets overblown or misstated because both the media and the politicians, as we go into an election cycle, have a vested interest in people being worried. If there's a crisis, you know, you watch the breaking news. If everything's fine, why would you watch the news? And for a politician, if there's not some sort of crisis, why do we need them? Why do we need change? So there's really a motive to at the very least magnify any situation, and at worst, kind of create panics where there really doesn't need to be one. Because again, from a fundamental sense, today, things are very, very good. And I think people have a tendency to look back and say, boy, I wish it was like it used to be. Why? You know, in the 70s, we had horrible inflation, high unemployment, 16% mortgages. By the mid-90s, the Japanese and the Germans owned everything. How bad are things today? You know, and I think the other thing that's very important is to differentiate between social issues, which the politicians are going to address, and economic issues. Because what may make sense economically may not necessarily be a good thing socially. And you've seen this. A company lays off half its workforce. What's the stock do? Goes up. So is that good or bad? Well, if you're an investor, that's good. If you're laid off, it's bad. So I think we have to kind of gain some perspective on these types of things. Understandably, people are going to be concerned. It's human nature. But I do think that we have an opportunity now, and at least we don't have these huge risks if people are properly diversified and don't do anything crazy. So with that, I'd like to introduce Jon Karl. I've known Jon for a number of years. You may have seen him on CNBC in the last few weeks. He's the president of the Retirement Learning Center, which is a resource that we have as experts in the retirement plans and the retirement regulation area. So, Jon.